So what we're going to look at today is a bunch of data that comes from our Demand 360 product. So if we go in and have a deeper dive into Singapore for Q1, direct web represented 12%, OTA 20%. Clearly, the OTAs are winning in this market. Now, when I broke this down and had a look at it segment by segment, differences from hotels to hotels, but everyone was running significantly more OTA business than Web Direct. But that Web Direct data in Singapore goes anywhere I've seen as low as 3%, up to as high as 30% of business coming in via brand.com. So there is big differences from one end to the other across the markets. GDS is still representing 14% of rooms sold in Q1, which is a non-corporate month, or non-corporate period, because of the disruption that Chinese New Year has on corporate business travel. So it's still significant. So then break down by OTAs. I just separated out Expedia and Booking.com in Singapore. And Expedia was 36% of the OTA business. Booking.com, not Priceline, Booking.com, 43%. Other OTAs representing 21%, but again, a significant part of that really was two OTAs, which was Agoda and Ctrip. Okay? But it's interesting to see how much of the rooms sold into Singapore, if you think 20% of all rooms sold are OTA, and really Expedia and Booking.com have roughly half and half of that, or Priceline and Priceline and Expedia have roughly half and half. That's a lot that these two distributors have selling your hotel space. Then, when I was drilling down into data, I found something that I found really interesting. And that's the rate mix between an OTA compared to a brand.com booking. So the rate mix in Singapore on the OTA bookings were over 90%, pretty much all on restricted rates, or what you would call discount rates or restricted rates. Very little on your bar rates, your unrestricted pricing. But when you look at brand.com, there was a much more even split. And then another interesting thing, a lot of people think of brand.com just as the same type of business that comes from an OTA. But you have in Singapore, 8% of that brand.com business is corporate business. Okay? 5% is other business. When drilling down, it looked like to be wholesale. So hotels that are getting some of their regular travel agents booking via brand.com rather than going direct to the reservations department. But a very significant difference in rate mix between OTA and brand.com. So GDS, when we look at the next few months, okay, so this is looking at all GDS data. So every single hotel in Singapore and every single piece of GDS data from the 4 GDS. You see that May is looking down, and June and July, June is on par, July is looking up. Often, again, here in Singapore, we'll look at data and go, oh, the world's ending. June is down, for what reason? Or sitting flat, but will continue to go down when we look at GDS data. Why is that for Singapore? Anyone want to tell me? Ramadan. So every year in Singapore, Ramadan happens. Every year. It changes by 2 weeks each time. And every time it seems to come as this big surprise to the hotels that the market is going down. I look at hotels' budgets, and I've been doing it a lot the last few months when we're seeing hotels. They've all got June budgeted at a few percent above June last year. It's like, who are you kidding? It always goes down. As revenue managers, we seem to struggle still with movable events. Ramadan, Chinese New Year. When we budget at a monthly level, we often overlook the impact. And we can see very clearly in data the impact of particularly those two events into the Singapore market. Looking from 2015 to 2017, what we're looking at here is month by month the group blocks compared to the transient business. So how much of the business coming into Singapore is at group level and how much is in transient. And you'll see a few spikes. So again in Singapore this past quarter, who saw a diminishing group business over the last quarter compared to the same quarter last year? No one saw it? Okay. So every hotel I've seen in Singapore over the last 6 weeks has talked about the lower group business for the first half of this year compared to last year. Anybody want to have a guess or tell me why you think that is? Why you would think the group business would be lower this time? Pardon? Look, a little bit to do, for example, no air show. But probably the main contributing factor is that at the end of 2015, there was the bombing in Bangkok. Now, as soon as there's terrorism events or unrest in Bangkok, and I've watched this for about 15 years now, as soon as there's unrest in Bangkok, the business, both corporate business and group business, transfers into Singapore, a bit to KL. Generally, Hong Kong doesn't see it because the Hong Kong pricing for group business is much higher. The transient business or your corporate business, it impacts for about 3 months, but your group business, because of a longer lead time, impacts for about 6 months. So when we look at Singapore group data being down, each time Singapore group data is down, Bangkok group data is up. And this is going back quite a number of years. You see exactly the same thing between Phuket and Bali. When something goes wrong in Bali, Phuket's business goes up. When something goes wrong in Phuket, Bali's business goes up. So again, it's something as revenue managers that we're still not being able to get a good handle on in our forecasting and budgeting process. But there's a direct correlation between the two. And for those of you in big groups, whenever there's terrorism events or significant natural disasters, you should track the impact of business from location to location. And we see it really clearly in the data. If we look at our channel spread across the last 2 years, although we're seeing a lot of data about the internet is getting stronger, more bookings coming online, actually within the hotel level, there's not a significant change in segment mix or in channel mix. A few percent up, a few percent down. In some hotels, considerable differences between brand.com and OTA, but no huge escalation. No, you can see in these charts, there's nothing that goes right up. So there's a lot of talk about it going right up. A lot of people think they're underperforming because, and I'll give you a very good example. I was in a city in Vietnam. There's 7 5-star hotels. Over a period of 3 days, I met with every one of those 7 5-star hotels, most of which data I have. Every one of them, general manager, director of sales and revenue manager, what is your key problem? Our key problem is that we don't get enough business via brand.com and our owners are beating us up about it. They're beating us up about the OTA commission. How much business do you get brand.com? The highest figure I got from any one of those hotels was 5%, and the data we had supported that. Every one of those hotels and their owners knew that in Ho Chi Minh, 20% of the bookings made into that market came from brand.com. They knew it, but it was a fallacy because people thought they were underperforming. So the last two hotels, when I saw this, I said to the general managers and director of sales, I went, where do you get this 20% from? Oh, well, it's a very close community. We all know each other and we trade data and that's how we understand. And I went, well, what do you tell people? And they went, I tell them 20%. Why? Oh, I don't want to look like we're doing so bad. Okay, that was in every one of the hotels. So in a lot of cases, there's this myth, okay, because you always tell your competitors what you want them to know, and you always tell your competitors what makes you look good. So you'll lift stuff up in case you're not at that level. Okay? So be careful about setting strategies on your gut feel of what you think is happening in the market. You know as revenue managers, and I know Rachel from Ideas will tell you this all the time, data, data, data. Okay? Use data to make decisions. Even what I'm showing you today, you can go away and go, yep, got a good understanding and I've got data. But what you don't have is what's happening in Marina Bay area, because that is very different to what's happening in Orchard Road, which is very different again, which is what's happening around Tanjong Katong. So just get an understanding for real. So this is your mix between OTA and brand.com. So you can see there's not huge differences over the last 2 years. Despite all the talk that there is huge swing to the OTAs, for the last 2 years there has been a swing to the OTAs. Now, you really got to go back 5, 7 years since supplier was strong. Right? Anything less than 5 years, you're still showing OTA as a significant segment. A couple of periods there that are looking really high for those that can't read, that's your total online business, sits at around 40%, and that's December. Okay, so it's driven by leisure travel. Now, the bad news for Outlook is when we're looking ahead on pace, on rooms on the books by segment, the two segments that for Q2 are looking really behind pace compared to previous is your group business and your online or your negotiated corporate business. Your online business and your wholesale business for Singapore is significantly up looking ahead Q2. So this data was taken just before the start of April. I think it was 28th of May or 28th of March or 27th of March. But group and negotiated is significantly down. Now, some of that impact will be Ramadan. Okay? Some of that impact will be because of Communic Asia changing, but it shouldn't impact Q2 because that's just a change from June to May. Okay? But there is a big gap in groups on the books this year to last year. So just be careful and understand that the group block across the city is very much lower. So I hope you found that data interesting. And if anybody wants to know anything more, there might be bits I didn't include in the presentation that I've got in my head.